Hello and welcome back to ASX Market Watch. Thank you so much for joining me. I must say it's absolutely fantastic to have you watching. But I'm looking at three charts this week, the ASX Top 200, the Dow Jones and the FTSE, and just seeing where they are and just what to look out for in the future, where we might head, where we might find resistance as well, just to basically give you a big ballpark view of where we're at and what we might expect in the markets. So, first up is the ASX Top 200. Now, really a really simple way to look at it, guys, is these two lines here. This is a daily chart looking back over probably the last 2.5 years on the ASX Top 200, and all I've done is I've drawn in my downtrend line, which was crossed in July 2009, gave us a fantastic little bull run, quite a bit of money to be made during that time. It was a really smooth trend. I absolutely loved it. Not like the last 5 months, which has been quite a lot of sideways movement. I'm sure people have been able to make a lot of money in that time, but I was not one of them. I prefer a trending market myself. And all I've done then is the uptrend line. Now, what this indicates is that we're still in an uptrend on the ASX Top 200, and if you want to look at it from an even shorter term point of view, this again is a daily chart. Each of these bars is 1 day. What we're looking at is this would be where we'd find short-term support, really at this shorter-term trend line, which would be if the market was to cross below this trend line and then below 4,780, so really around this level here, that would be a short-term indicator of a trend change. But one of the best things about the ASX Top 200 was on Friday, this last bar here, and I'll just see if I can increase this even more so that you can see it. This last bar, this little blue bar here, this outside bar, now it started high, went all the way down. Now, it's not a massive move. It was only about 50 points. But still, I mean, and obviously we've had larger moves than this, but still, you know, it was really good to see. It sort of brought a little strength back into the market. Why did it do that? Because it started at a long tail down and then closed back on its highs, which means that buyers came back into the market and they're basically supporting the market somehow. Either that or there's just a lack of sellers. Either way, doesn't matter. It means the market's still rising. And it wouldn't really be considered in a correction again until it was to cross below this short-term uptrend line, as I said before. So really simple stuff, guys. Now, the other part to the ASX Top 200 is the 50% retracement, which I was talking about late last year and possibly early this year as well. I'll just bring this up. Okay, so this, again, is the full bear market from 2007 to 2009. Now, if we look at a retracement on this, so from the top to the bottom, and we divide it into sections, so 25%, 50%, 75%, 50% retracement is one of the strongest levels of support or resistance in any market, according to WD Gann. Now, probably a few other people have said it as well. Basically, anyone could come to the conclusion. Seriously, it's not rocket science. But that level, that 50% retracement level, is pretty much bang on the 5,000 point mark on the ASX Top 200. So those two things combined will form a lot of resistance for the ASX Top 200, and to be absolutely honest, it's probably one of the reasons why the ASX market is lagging behind the Dow Jones and the FTSE, and I'll show you why that is in a second. But anyway, long story short, upward market, wouldn't really see a correction until about 4,780. Next one is the Dow Jones, and again, really simple, guys. These two trend lines here, as you can see, the longer term downtrend line, we sort of found a bit of support, a bit of resistance, sort of snaked around there for a couple of months until it's absolutely shot off again, and we've been able to redraw our uptrend line so that we can find support at that uptrend line in the future. So that's one of the best things about trend lines, is that it can actually find support and resistance at the trend lines, and it's kind of a dynamic way to find support and resistance instead of your old static, horizontal support or resistance that some people might be using already. Now, the second part to this is basically what we're in an uptrend. It's moved away from both the downtrend line and the uptrend line. It's really basic stuff. Anyone could really draw these lines. It's really not rocket science, guys. I'm sure you won't have any trouble doing it. And this is your shorter term uptrend line here. Really wouldn't find a shorter term correction until it crossed back below 10,500. So yeah, not much more to say on the Dow Jones. We're currently in an upward market and really wouldn't see a correction until that sort of level. Now, the reason why I look at these indices is because William O'Neill, probably one of the best traders that I actually really like from the Market Wizards books, if anyone's ever read those. He says that 3 out of 4 stocks will follow the overall market. So this is it's just a great way to get a gauge of which way you should be trading. Basically, the indices are pointing upwards. That means the overall market is pointing upwards. That means that 3 out of 4 stocks will probably be also pointing upwards. Now, that's not to say that I've actually got a few short trades on myself, and they're actually still making money, believe it or not. But it's because their actual sector, which is the telecommunications sector, is still pointing downwards as well. So it's more following that. Anyway, I digress. The next one is the FTSE, and really similar style to the Dow Jones. Found a lot of resistance at that longer term trend line there. That's a 2-year long term trend line. A little bit of resistance, a little bit of support, and now it's just taken off again from that level, indicating more strength. If you wanted to look at the FTSE from a shorter term point of view, then even last week, if you will remember, I pointed out that candlestick formation that was forming. It was a shooting star. Now that was one of the. It's just such a fantastic bar. I love these single bar analysis. They are really excellent. This is the bar here. As you can see, it started low, went all the way up, and then closed on its lows again. But the very next trading day, which was the Monday, it did exactly the opposite thing. So that basically negated any sort of power that the shooting star may have had. There is probably a name for this other bar as well, which started high, went low, and started high as well. I don't know what the name is, I'm sorry, but I do know that what it means is that there are buyers who came back into the market and pushed the market up. And as you can see, over the course of the week, the FTSE has risen. In fact, if you want to go a step further, I did say last week that I wouldn't actually physically trade off this one bar analysis. I would wait for it to cross the trendline support. Now, that's pretty much exactly where it did find support. It was within a few points of this short-term trend line support. So, that's why I love trend lines. Such a simple tool, and yet such a powerful tool as well. So, FTSE, we're looking at, it would really have to cross below that shorter-term trend line and below the previous trough at around 5,580 roundabouts. Now that would be for a really short-term correction signal. At the moment, like all the other indices, it's pointing upwards. 3 out of 4 stocks, I would imagine, as a ballpark figure, would be pointing upwards as well. So that's a good way to be trading at the moment. Other than that, I hope this has helped, even in some small way. If you picked up one tiny little thing from this analysis, the retracements, the shooting stars, or the candlesticks, the trend lines, all of it goes together to form, a successful trading plan when you do put them all together. So again, I hope it helps. Drop by my website, which is asxmarketwatch.com. Has a free course on there on all of this analysis as well, and how you can use it to make more money and lose less money in the markets, which is really what it's all about. Other than that, hopefully I'll see you next week, and until then, happy trending, guys. Have a great week. Bye now.